Hello everyone, investment scams rampant. Please vigilant and discerning. Do not trust information from unknown sources. Please make sure to recognize 2 official Capital Securities community, Facebook, Capital Securities, YouTube, Capital Wealth Insights.
Hello everyone. Good evening to all the viewers of Capital Securities Evening News. I am Yuan, an analyst at Capital Securities Investment Advisory. I'm very happy to be here with you today, Thursday, September 11th. Let's discuss 2 or 3 topics as usual. We'll be talking about the CPI, which will be released shortly, as well as yesterday's data. We'll also review and analyze the PPI. In addition, when it comes to prices and the labor market, which one does the Fed pay more attention to right now? We'll also briefly talk about the background of the last rate cut. And as for the tech giants, which one is enjoying 3 meals a day? We'll cover that in a bit. That's the second topic. Looking at IPOs, let's talk about the buy now, pay later sector, or BNPL. What exactly is this concept? This is a type of sector that is somewhat derivative. In the fintech field, it's different from the traditional ones, regardless of whether it's banks, lending companies, or credit card companies. It's quite different. But actually, the business is quite similar. They also make money from it. For example, things like service fees or late payment charges or income from interest, revenue. Alright, first, let's take a look at yesterday's PPI. After it was released, we actually mentioned it a bit during the session yesterday. It showed a slight decrease compared to the previous month, down 0.1%, which is a negative value. If we look at it year over year, it actually rose by 2.6%. A 2.6% increase is still lower than expected, because the original expectation was over 3%. Trump, on social media, said there is no inflation. The data has already been released, and there is no inflation. He believes that the so-called big cafeteria, let's not name names, but that person, must cut rates, cut them significantly. Actually, he knows the Fed is already set to meet in mid-September, right? And this talk about rate cuts, he insists rates must be cut immediately. He doesn't even realize how out of touch that is anymore. He's been saying this for 3 or 4 months now. But because the Fed keeps ignoring it, every time they vote, it just doesn't pass. He keeps going on about it. Honestly, it's almost like he's doing it to achieve his own goals. He's really put in a lot of effort because he wants to push for rate cuts. Let's look at the data. This chart from yesterday has been updated. It's just been refreshed with a new update. That's all, an increase of 0.1. This is the month-on-month figure, meaning on the producer side, they haven't really felt significant pressure from price increases. This is the overall situation for these manufacturers. If we look at it from a year-over-year perspective, it's a bit higher than before, of course, compared to last year. At the same time, it increased by 2.6%. But the market had originally expected more, 3.3%. So actually, the gap here is quite obvious. In reality, it doesn't look like prices rose as much as the market expected for the same month. If you compare it year over year, then of course it's even more negative. In other words, actually, could it be that the price situation between month and month hasn't really changed much at all? So it does somewhat align with what Trump said about inflation. Of course, if this inflation refers to the producer or manufacturer side, then it's really not that serious. But let's take a look at bond yields. They actually reflect the overall interest rate cuts, and since the non-farm payroll report, they've started to react quite significantly. Actually, the recent news is really just putting a bit of pressure on it, especially on short-term yields. Here, we're listing the 2-year Treasury yield. Why the 2-year yield? Because it's pretty obvious that in mid-September, they're getting ready to hold a rate meeting, right? A cut of 25 basis points or 50 basis points. Of course, the general expectation is that they'll start with a 25 basis point cut. So in the short term, this is what best reflects the decision to cut rates, right? It's the most sensitive, so that's why we've listed it here. In the short term, you can see that rates have already dropped to around 3.5%. Of course, the current interest rate hasn't reached this level yet, but it's clear that there's been a consistent downward trend. If we look at the overall trend over the past 3 or 4 months, it's definitely been heading down. We can set aside the fluctuations in the middle for now, but overall, this is the general idea. Alright, let's take a look at some updates regarding the Federal Reserve and personnel changes involving Trump. Recently, a judge actually approved this matter. This is about Feder's Cook, who was previously going to be dismissed by Trump. But now, he can continue to stay in this position. What was his reasoning exactly? Trump believed that, in holding such a position, he should uphold very high moral standards. Previously, for example, Trump accused him of being involved in mortgage fraud or related fraudulent activities. But what was the judge's perspective on this? He believed that before Cook was vetted and confirmed for the nomination, even if this matter did exist, assuming it really happened, it had already occurred before that. Since he was vetted at the time, he was approved and confirmed for the nomination. What should be focused on next is Lisa Cook herself. During her tenure, while she was serving as a board member, were her actions illegal or non-compliant? This position requires that kind of conduct, so any behavior that violates the requirements of the position, so-called dereliction of duty, is actually determined by the judge. The key point is whether there was any dereliction of duty during this period. If there wasn't, then actually, the judge believes that Trump's reasoning doesn't hold water, so she should be allowed to continue working. That means, in the coming week or so, she should still be participating in the Federal Reserve's interests and activities during this time. Actually, it's very likely that she will participate. The second point is about another person whom the White House was supposed to approve. This is Milan, who was nominated by the White House and has already passed the vote in the Senate Banking Committee. In other words, next it will be submitted to the full Senate for a vote. Of course, since the Senate Banking Committee passed it unanimously. So if it's mentioned online that the entire Senate will vote on this matter, Republican-supporting senators actually feel the same way about someone like Milan. Looking at the current situation, most of the Senate's opinion leaders who have spoken out are generally quite supportive of him. So there's a high chance it will pass. But next, the question is whether it's possible to get it done this month. Right now, it looks like there's a good chance it won't make it, because after the vote passes, there are still things like the swearing-in ceremony and other formalities, and the schedule is really tight. But even if it doesn't happen in September, it's very likely to be in October. If he joins the Federal Reserve, then of course it means that the dovish camp, basically Trump's people, will have one more vote of influence within the Fed, including those from before. For example, there are already 2 members inside who previously voted in favor of a rate cut. But since rate cuts didn't happen before, they were in the minority. If another is added, the voices of Trump's camp will gradually grow stronger. This will affect the future and even the interest rate trend over the next half year to a year. Alright, let's look at why we started the headline with shrinking inflation and the job market. Which is more important? Let's look at this. This is a statistical chart of non-farm employment numbers, also in 2024. Back then, at the September 19th meeting, the Fed had already cut rates by 50 basis points. That was the first rate cut since 2020. It was the first rate cut since aggressive rate hikes. This purple line represents the decision point. In other words, assume the right side. Let's not look at the right side, just the left, and you'll see. Actually, it was also after several months of strong non-farm employment numbers. For 3 consecutive months, it dropped. The standard? New job growth falling to 100,000. Just 100,000 new jobs. Actually, at that time, it wasn't quite there yet. The number that came out was still over 140,000. This is already after a downward revision, so that's why it looks like this now. But at that time, it was lower than the expected 16 or so. I remember it was about 14.6 and 16.2. Expectation was 16.2, below expectations. The Fed lowered rates as the job market cooled. Signs were present, reducing the need to. Not to mention, in the last 4 months. If you just look at the data, it's like things could go off the rails completely. Why? Because the pace of this cooling is actually a bit too fast. For the past 4 months, we've already had over 100,000 people each time. That's all in the past now. So if you look at it 8, 7, 6, 5, 4, even 4 or 5 months ago, That's all past. So why weigh what's more important? Who matters more? On the scale, one side is prices. No problem, so the scale tips this way. What is it? Maximizing the job market. Reached its maximum? No, it's shrinking. So the Fed cares about this. That's also why the market places importance on rising expectations for rate cuts. There will also be CPI. Actually, the expectation for a rate cut in mid-September this time isn't strong. It's not significant enough to have impact. Right now, prices aren't the main focus of the Federal Reserve in the short term, but what will have an impact might be more in the medium to long term. If the CPI goes up a bit, or is much higher than expected, then that could have an impact, but it would probably only affect, say, the interest rate decisions in October, December, or even next year. That's the direction things would go. But in the short term, for September, there shouldn't be any issues. Alright, let's look at the second topic. We talked about the tech giants 3 times in one day. So, what's first? We're talking about Amazon. As you can see, Amazon, actually, over the past couple of days, they've released a ton of news. First, they teamed up with Netflix. If you usually watch some of the animated shows on there, Korean dramas and movies are extremely popular on the platform, especially in Taiwan, major economies like Japan and the US. These shows are really popular there too. So, they said Amazon and this company, Guangfei, Netflix, are establishing a partnership. What does that mean? If Amazon wants to run ads, all kinds of brands will do it through Amazon. Otherwise, it would mean that advertisers are allowed to access, or in other words, to tap into some of the advertising resources available on Netflix. In other words, if the fourth quarter starts, these brands can. Indirectly, through what? Amazon's DSP, and then advertise on Netflix. And actually, for us in Taiwan, it's hard to say, because when we watch Netflix here, we actually can't see. We don't see any ads, right? But in the US and Europe, their cheaper plans actually do have ads. The lower price plans, in other words, the selectable membership options on Netflix, come with ads. So let's set aside the situation in Taiwan for now. Over in the US, Japan, the UK, and other Western countries, they all have ad-supported plans. So in these countries, as for the launch, well, how should I put it? When you see numbers like 4 and 23, what do they mean? They're based on a ranking from SimilarWeb. The statistics we're looking at are from the US, based on American websites. So what is the average traffic ranking on there? Well, Amazon, as the e-commerce giant, of course ranks at the top. No surprise there. Netflix is ranked 4th. It's considered a leading streaming platform, and it's ranked 23rd overall. That's actually already pretty impressive. Of course, it's no surprise that platforms like Facebook and YouTube are at the top. Everyone knows they have massive traffic. Plus, user engagement on those platforms is extremely high, so everyone is still using them. You're watching our show on YouTube right now, aren't you? So there's no question. These statistics are quite credible and well-founded. Alright, let's take a look at the second point. What did he mention? Amazon's unmanned vehicles. Previously, they acquired this company, Zoox. Next, they launched Robotaxi in Las Vegas. Just like we talked about on the first day of this week, there are already some frontrunners in the Robotaxi field. For example, Google Waymo is also a leader. Some companies provide technical services themselves, like WeRide. If we're talking about the field in China, there'd be like Baidu. Tesla also has some, but maybe the number of Teslas is too small. There are probably only a few dozen vehicles operating in specific areas or on certain weeks. Some are just for testing, or provided to certain clients. Now, Amazon is about to enter this field. They said they will offer free rides for passengers between Resort World Las Vegas and Area 15. It's passenger service for resorts like this. Their vehicles are special. It's mentioned they're cars. In fact, there isn't really a steering wheel. And actually, it's like this. It's a pod-shaped, pod-style concept. That means it doesn't have a distinct front or back. It can go in any direction. This is autonomous driving. It can go forward or backward in any direction it wants, so there's no obvious front or back. Both sides are possible. In this situation, then Actually, when I watched their video, This is how it carries people. Whether it's turning around, spinning, or moving forward and backward, the movement is actually very smooth, so you'll feel like this is a really novel experience. Alright, so in short, now they're moving into the field of autonomous driving and robotics. They've stepped into this field again. Now, let's look at the third one, something we'll discuss today. As soon as you see this eye chart, everyone knows its purpose. Amazon also announced they're developing 2 AR glasses. Among them, there's this one called Amelia. These glasses are meant to be provided to their delivery personnel, because as an e-commerce company, they have a huge number of shipments and logistics, and these employees help them get things done efficiently. Let me also say hi to everyone: Min, Alice Fu, Chin Chen, Hiwu Buji, Anaya, and then Hector. Wow, this afternoon I went to the station, and it felt like a grand event. I'm very happy everyone is watching, so let's continue. Besides Amelia, they're also planning to target consumers next. That is, the general electronics consumer market, the broad 3C sector. In this field, it's a product like J-Hog. Here, they have 2 products. One will be launched sooner, and it's aimed at their delivery partners and labor employees, so that one will come out faster. It will probably be released around the middle of 2026. As for J-Hog specifically, for consumers, it will be available by the end of 2026 or the beginning of 2027. In the future, it's about to compete with Meta. So, what about Meta's events? Next week, on Thursday morning, there will be Connect. At this 2025 conference, they might announce something like Meta glasses, and then, like the collaboration with Ray-Ban, actually, there still isn't anything called a head-up display. That is to say, inside the glasses, usually on the right side, there will be something like a semi-transparent screen, or a panel, where you can see information displayed. It prompts you for incoming calls, messages, or even helps analyze how to navigate your next route using the map. These smart glasses have an internal code name, Hypernova. In fact, the actual name might not be this. It seems like the internal code name and the public name are quite different. It might end up with a name like Celeste or something similar. As for the price, we saw that $800 per pair of glasses is pretty high, right? But Bloomberg reported this before. They said it could reach $1,300 or $1,500. Maybe that was the original idea or what was being rumored at first. Those reports said that $1,300 per pair would be about 40,000 NTD. So, setting the price at this level now actually means they've already lowered it. Actually, when we assess or analyze it, the main thing is that it's showing off that it has this kind of technology. That's the first point. Anyway, it's about mass producing on a large scale, and because it's so close to the eyes, the quality requirements for this kind of product are actually very high. Plus, it's a relatively small, transparent screen and so on. So over here, we can still see everything. What's happening right in front of your eyes. But the transparent part inside also lets you see this AI device. What information is this mobile device providing right now? You can use it to assist with taking photos. Next, it needs to know. Consumers will focus on this. How things will evolve and what consumers will do, their behaviors when using it, and what related business opportunities can be explored. One reason is they lower the price. Besides making it widespread, maybe at first it's not meant to make a profit, but it can. Collect more data. And this data is becoming more and more important. It's also becoming increasingly monetizable, or can spark future directions for R&D amp winking and laughing. Plus, it can generate buzz and attract attention. Everyone remembers back in January this year, right? Actually, they partnered with Ray-Ban for smart eyewear. In fact, it was given as a gift. Zuckerberg gave it to Trump as an inauguration present. So at the time, it sparked some discussion. This is also one of the reasons they launched a product that has some value, but isn't too fancy or expensive, to test the market first and see how it responds, then look at future developments. Now, aside from Meta, it seems like Amazon also wants to get involved. Of course, we mentioned this to everyone about a year ago, and while the actual launch wasn't that quick, there have been ongoing rumors that they're already developing something. Looking at the evolution of AI, Which companies in the industry should we pay attention to? Here, we've listed a few, but of course, there are still more. Let's look at some. For example, Microvision or MVIS. Its stock price isn't high, but what does it offer? It provides a core solution. Emotion is a unique company. They provide haptic feedback technology. Actually, I think what's more interesting is you might need to use touch controls. Some things might have buttons, but they're not buttons. For example, it might be something like an LCD touch panel, something along those lines. The code name is IMAR. Currently, the stock price is 6.84, and then there's Games VRAR. Just looking at the VRAR stock code tells you everything. Virtual or augmented reality. All kinds of applications are possible, and software capabilities too. So how does it work? What programs are written into this panel? It responds based on user commands or instructions. On the software side, I've listed PTC. You don't need to think of PTC as complicated or unfamiliar. It's not unknown, nor new to everyone. Heard of AutoCAD or CAD? This company makes that software. So, as you can see, the stock price isn't cheap. It's actually a bit high, around 204. Or they even have another software related to product lifecycle management. Whether it's PTC or PTM, both are possible. There's also OLED, because we just mentioned display panels. The tech company for OLED displays is Universal Display. The stock prices of these two are both relatively high. Keep watching and paying attention, as these might be the ones to look out for next. Whether it's Meta, continuously interviewing and about to launch products, or Amazon, wanting to join this track, this industry will continue to develop. Alright, let's look at Amazon's stock price from yesterday. The stock price wasn't great yesterday, which has something to do with news. Or you could say the market's focus isn't on them right now. Capital has temporarily pulled out. But you can see that since April, these assets have quickly bounced back. Actually, it's still in a bullish pattern right now. If you say it's correcting, maybe after a day, it could go back up again. Honestly, it's hard to say for sure, but we're providing everyone with a reference point here. First, it's roughly around 35 times. For an e-commerce giant like Amazon. In the past, it was usually in the 40s, but now it's dropped a bit because its profits and everything have caught up, and its monetization ability is good too. Next, let's look at the 3 moves it made. Will these truly benefit future operations? We'll have to wait and see. Let's also look at the overall market. The S&P Wink with tongue sticking out 500 index, as of yesterday, was up about 0.3%, hitting another new record. We already mentioned yesterday that Nvidia now accounts for almost 8%, currently 7.41%. And yesterday's benefit? You've probably seen the news, nothing new from us. We're talking about Oracle, as we discussed it before market opened yesterday. In their earnings report, guidance refers to future unfulfilled orders. He remembers $455 billion in orders, so many for one quarter. Their revenue is about $15 billion or so per quarter. He has many massive orders to process. So yesterday Nvidia also benefited from this good news. It boosted the market because it proved AI demand, especially on the hardware side, since that's what he emphasized. This so-called over 450 billion yuan in orders emphasizes cloud and AI. In other words, it's about the basic infrastructure and hardware facilities for cloud and AI. There are so many needs to be met within that. Of course, there will actually be some integration between software and hardware. But this ongoing trend really hasn't changed. That concern has been somewhat dispelled. Previously, whenever people talked about AI being overvalued or questioned the demand for AI, those doubts have smoothed over. Now, everyone feels optimistic and positive. This momentum is strong, and the scale is huge. Over 4,000 US dollars, compared to their quarterly revenue of 15 billion US dollars. It's extremely hard to calculate precise. From a technical perspective, focusing on the technicality, it gapped up directly and stood above the 20 and 50 moving averages, shows its inherent strength, whether as a leader in GPUs or data centers, making it the frontrunner in AI. Some media headlines are effective. He said that price has become an answer. Future orders seem assured. There are no issues, and sustainability is strong. I actually think that's pretty accurate. There might really be a chance. Now, let's take a look at what's happening in the US stock market. Apple, as we mentioned earlier. First of all, aside from talking about the highlights of their launch event, what kind of concept did he offer? Next, let's buy an Apple phone, the very best, the top-of-the-line one, and spend $2,000 or 60,000 new Taiwan dollars. You can all see why it has to be so expensive. First of all, the screen is big, which is normal. All the specs are the most cutting-edge available today, and that's not a problem. What he mentioned is that the storage space reaches 2 terabytes. For our laptops, or let's say many computers should have 2 terabytes. That's not an issue. Laptops might. Just having this 2 terabytes of storage is actually already very useful. So right now, actually, what I'm personally thinking is, what is Apple trying to do? Basically, Apple wants to make a phone like this. The concept of a single product is already starting to replace, or will gradually replace, what we call laptops. First, look at it. Screens are already really big now, right? Second, think about it. When we get home, whether relaxing, listening to music, unwinding, or looking up something new, videos or ebooks, how often do we really open our laptops? Aside from work, where typing is faster, how often do we use laptops for daily entertainment? Everyone can ask themselves this. We have laptops, but how often do we turn them on? Honestly, I don't use my laptop daily, so it is. Actually, I feel like Apple has already applied this concept to their phones. On top of that, smartphones are increasingly important. In daily usage, they've long surpassed laptops. This concept is often overshadowed. Unless you have high work demands, like design or business travel, then carrying it daily is fine. In that case, it basically becomes your office computer. But how often do I open my laptop for everyday leisure and entertainment? Think about it. How often do you turn it on? They must have done research and concluded that high-end groups, consumers who find it hard to buy, would go and buy something like this, the 2 terabyte option. Maybe they've even added some concepts to it. What concepts? In economics, they're called positional goods. This is a luxury item meant for showing off. The more expensive you sell it for, the less you actually care. Just like we talked about yesterday with the Hermes edition. The Apple Hermes edition, for example, if it really is on the same level as Hermes. No matter how much Hermes charges, those wealthy ladies or high-end consumers, honestly, they don't care at all, because they feel they can afford it, and they can buy it. The more expensive it is, the better. Owning this item today shows that I'm high class, that I have social status. All kinds of comments or reviews say it's very fashionable and tasteful, and so on. So next, Apple wants to create a similar highlight. $2,000, $1,999, the situation. What about HSBC? Some multi-asset strategists mentioned this. He said employment data is weak, but economic activity is strong. He mentioned global manufacturing and U.S. consumer data. In the past few weeks, there has been a rebound, so he thinks, looking at the situation this way. Employment data, that is, the labor market, is the main focus for the Fed. And he also said that if there are signs of cooling down or even a bit of recession, when that happens, the Fed will start cutting interest rates. But these rate cuts are actually even more favorable for traditional economic activities. Whether it's business loans, hiring, or investment activities, these can be supported even more. So these two things influence each other. The worse employment gets, the more rate cuts people expect. As a result, the economy might get better, especially for traditional economic activities. Moving on. Yesterday, we mentioned the NATO member countries by the Baltic Sea. Yesterday, we drew a diagram, for example, showing these 3 countries and the possible scenarios. The corridor in the middle, the so-called Suwalki Gap, could be cut off by Russia in the future. NATO has always guarded against this situation. They even jointly sent a letter to the US Congress, telling them, hey, don't cut this military financing program for us. So, what exactly is this military financing program? It's the previous one. The US Department of Defense said it wanted to cut funding for the European countries surrounding Russia. Basically, these 3 countries. So he said, comrades, why am I spending money here, and why are you investing? Every single dollar you provide in aid, every single dollar in financing you give us, for the security of our region, every dollar will have several times the impact. As for the procurement of American products and equipment, what does he mean by that? If you lend me $1 today, plus our own domestic budget, the military budget, and then add in NATO's aid or the resources provided by NATO, then, by leveraging these funds, we turn that $1 into $3 or $4. What do we use it for? Whether it's buying American military equipment or American components. Because American technology has always been very advanced, so he says, actually, the money you invest won't be wasted. His concept is that 1 + 1 is not just greater than 2, but even greater than 3, many times over. Because he turns it into a system, generating even more money to buy products made by American companies. So this actually helps the development of the American military-industrial sector and even military equipment. Earlier, we mentioned this chart, so today I'll go into a bit more detail about it. If we're not just looking at European defense, but at the EUAD ETF, for example, let's take a look at this broad defense ETF, SHLD. This was as of yesterday. It also hit several new highs, closing up 2.16%. For an ETF, that's pretty good. That's quite a gain. Now let's take a look at its top 12 holdings. These are names everyone familiar with. Right, ticker symbols left, company names listed. Venture is involved in military and AI, like data analysis for military collaboration. They have many contracts and collaborations with US government departments. Then there's Rheinmetall, a European powerhouse, and Raytheon and Lockheed Martin, all impressive. Northrop Grumman, a major US military company. General Dynamics is a major manufacturer. The 4th largest, L3Harris, and also Leonardo from Europe, are all significant players. This is also the case with Saab. Sorry, Saab is the same. Actually, all of these are companies led by Europe or even the United States. So, when it comes to such large companies, if we're talking about investment strategies, we can invest in batches. Or if you see an opportunity, you can wait until the price drops before buying. That's fine, as this is a medium to long-term investment. Plus, you're buying a basket of military-related stocks. So you're less affected by a single stock's performance or any company's financial reports. Alright, let's move to today's second topic. The tech IPO wave is warming up again. Here, we're talking about the United States. If we're talking about other regions, then in the past year, from the beginning to the past 9 months, Hong Kong stock market has been the hottest. It has been the global leader in fundraising, holding the top spot worldwide. But right now, we're talking about US tech IPOs. Just yesterday, the Swedish fintech company Klarna got listed on the US stock market. Actually, when it first started trading, its price surged even more dramatically. You could tell from the intraday price movement. At the opening, it shot up by about 30%. But later, there was selling pressure, maybe from early investors who wanted to cash out. Or maybe people held shares before the IPO and cashed out. They're focused on providing this buy now pay later service. Let's take a closer look at how they're actually doing. Last year, their transaction volume exceeded $100 billion, showing impressive results. 6 years ago, they began US operations. This March, they replaced the firm as the leading provider for American supermarkets, becoming Walmart's exclusive BNPL service provider. So, what does BNPL mean? Buy now. It means you buy now and pay later. That's the concept. In other words, we've already received the goods as well. But compared to credit cards, it's a bit different. It might use financial technology. It's built in, so it lets you pay later, That's basically how it works. And in the second quarter of 2025, their revenue reached $823 million. Year over year, it grew by 20%, so this operational growth momentum is actually pretty good. Of course, there are still some losses. Operating losses are still over $50 million. But globally, the number of users has already surpassed 100 million. That's a solid result. Next, let's look at which individual stocks in this industry we should pay attention to. He mentioned replacing the code AFRN, referring to a firm holding. What are their products? Are there differences in the 4 installment plan and the long-term plan? In 2024, their annual revenue growth exceeded 100%, with a 25% net profit margin. We'll also discuss their price-to-earnings ratio later. Next, be it Block or PayPal, these two stocks are not exactly pure BNPL, buy now, pay later plays. Because with these two, for example, they also have things like cryptocurrency platforms, or, for instance, payment services like that. It's a concept that's not entirely BNPL, so even though we've listed them here, you can actually pay attention to their other main business areas. Now, there are two other stocks we'll briefly mention, Zozo and Toast. When we talk about Rezo, it's actually more focused on small, fixed-amount transactions, so the amounts aren't that large, and the installment periods aren't that long either. In other words, it won't go as far as. For example, instead of a year or two, it's more like 3 months or 12 weeks, a much shorter period. It's about providing payment for this short-term period. Or if you want to split it into more installments, you can. As long as you pay everything off on time, they won't charge you any interest. For example, if you pay everything off within those 12 weeks, they won't charge you a single cent of interest. But if you go a little over or fall behind, you'll get charged. A little bit is extra income for the company. So what about Pulse? It's mainly a payment platform integrated into restaurants. Apu already has this BNPL feature built in, so whether you're dining out, grabbing a drink, eating something, or having a big meal or gourmet food, you can use this to make payments like that. Alright, next, let's take a look at AVN. Why are we bringing up its valuation issue? Actually, just wait a moment, several of these stocks are listed here. So why is it like this? Because actually, these three are more purely BNPL concepts. Think of them as using the same or similar technology, offering similar services. They all let people buy now and pay later, right? Of course, the customer base you target or the countries you operate in will be different, but the core business content is still the same. Your main selling point is this, so we need to look at the P/E ratio, which is a very important concept. Although it's still in a bullish trend right now, and it's also called the industry leader, it's generally recognized as the leading company. If you add Krana into the mix, then there would be two major giants. In fact, it also holds a leading position in this industry. However, its P/E ratio is still relatively high. In other words, can this service really provide the company with sustainable growth? Has it started to turn losses into profits? Or is the profit sufficient? Let's look at its specialty. It's also relatively weak because capital has been drawn away, taken by Krana. It's like saying there's a new competitor entering the US stock market sector. So the amount of funds has been withdrawn. So the professional market fell by 4% in a single day. What about Zito? We mentioned that it is mainly aimed at its users with high annual salaries and who will use it more often. And generally speaking, what kind of people are it targeting? Young people. Let's assume that you have just sold it. That is, you have graduated from college or are not studying yet. You have started selling and making money within about 5 years. Because the United States requires you to establish a lot of credit records, for example, before you can gradually apply for various credit cards such as Master or Visa. But if you want to go through so much trouble, you can use such a channel first. For example, you can use this to pay in installments or expand your credit. But because you will pay on time, you don't have to apply for any credit cards or those procedures. So its main selling point is this. In fact, since this year, you can see that if you look at it from before June, you will find that its growth is very amazing. Why from 2? Isn't it amazing that the stock price rose from 30 to 180? In fact, it has increased by 5 or 6 times, right? But because it was questioned after the financial report, the stock price has rebounded relatively speaking. In fact, you can see that the stock price has been cut in half. The decline has reached more than 50% from the highest point. So it has started to fluctuate recently. Let's see next. But its P is actually quite reasonable after the correction at these levels. 30 times is actually quite good. If we assume that it is continuing to grow and that user stickiness is still sufficient, it also fell by nearly 4% yesterday. If we only talk about the technical level, I would also think that it is relatively weak. Its correction may not be as much as the previous one because its increase is not that high. You can see that it may have risen from the low of 30 in April to 50, which is not bad, but not that high compared with CSO. Can we observe it after the recent pullback? If both sides really had to choose, you could consider these stocks as a concept you can pay attention to in the future because they skip traditional credit cards. Okay, let's take a look at this important financial event. Let's take a look at the CPI, which has just exceeded 8.5 and should have come out at 2.9. The expectation is the same as 2.9, and the core is good, so there is almost no change. The core is 3.0, and the expectation is also 3.0. The previous value was also 3.0. Let's take a look at the core of this quarterly bar, 3.1. The previous value of inflation in the unseasonal bar is 0.2, and the original value is negative 1.6. In fact, there is not much change. Let's see what happens after today's opening. In fact, the important thing is still after the opening, because now no matter how the futures index performs, it still depends on the spot opening of the US stock market. Later, especially on Friday, pay attention to the Consumer Confidence Index and the next year or 3. Negative 5-year inflation forecast. This is more important just looks. There's little difference between CPI and expectations, meaning if things continue, the market will likely keep rising steadily unless there's unexpected bad news or something negative for the industry. It seems nothing forces people to sell, as the uptrend is clear. Many still have plenty of money, right? And those already in the market hold positions and don't want to sell. So what happens? New people keep coming to buy, and new funds keep flowing in. Also, don't forget American exceptionalism. For example, in Taiwan, Hong Kong, or Japan, we invest in our local stock markets, right? Like Taiwan, Japanese, or Korean stocks. Would we invest in Mexico? Maybe, but it's not common. Or France, even less likely. But we do consider the global leader in capital markets, the US stock market. So let's see if this idea of American exceptionalism continues, especially now with so much market liquidity. Next, let's see if it can lead everyone to new highs. Let's check the earnings reports. Before the market opened, at 7 o'clock, Kroger hadn't released, and Adobe reports after the market closes today. Looking at pre-market, Oxford Industries is a big gainer. Yesterday, we talked about New Oriental, and here in the pre-market, it has rebounded a bit. It's up by a little over 4%. Everyone is wondering if dropping more than 20% in a single day was just too much. So now it's rebounding here. There's a stock, I quickly looked at. It had an even bigger surge the day before. Actually, it surged 2 days in a row before this. It's pretty crazy, because it went up by over 1,000%. So now, even though it's rebounding by a little over 10%, I actually think that's still not much. Honestly, it probably should. It might even drop even more. Because next, it's heading toward that. With digital currencies or cryptocurrencies, companies sometimes use money for things they weren't doing. Then they end up going all in on this area of business, which is why their stock price skyrockets. Now, if we look at others, there are actually still some related to biotech or pharmaceutical technology. It's like when Trump announced some regulatory measures on prescription drugs, which had some impact, but whether this can actually continue is still uncertain. As for the panel we just mentioned, it's currently down about 2% in pre-market trading. So let's see how things go when the market opens a bit later today. How will the CPI be reflected? Of course, the futures index has reacted to some extent, but we can observe after the market opens. For example, during the first hour from 9:30 to 10:30, we can watch whether it goes up or down. Actually, I think the impact is significant. The impact is already not as big. Of course, next we'll see if there are additional catalysts to push the market up, or if changes cause it to adjust downward. Let's wait and see. I'm glad Uni Online Security ends here. I'd like to remind everyone, you can keep an eye on a few tech giants like Google. Then there's Meta, and also Amazon and Apple. These 4 companies have newer developments. There's some news about them. Google is one, and as for Apple, I should add a bit more as well. Wishing everyone good luck with your trades today, and Taiwan stock market opens smoothly tomorrow. Everyone enjoy abundant profits. Thank you, bye-bye.
Our company has no improper financial interests in the individual securities recommended or analyzed. The information in this program is for reference only. Investors should make independent judgments, evaluate carefully, and bear their own investment risks. If you don't want to miss the latest market updates, be sure to turn on the notification bell and hit subscribe. In addition, we have plenty of great video content on both Facebook and YouTube. Don't miss out. In our group, we share in-depth explanations of global financial events with you every day.